So the Bank of Canada finally announced its first rate cut that we had discussed in our spring market video earlier on this channel. And with that rate cut now in the playbook, obviously a lot of questions do come to the surface. Some of those common questions are they going to continue reducing the rates for the rest of this year come July and fall? And what is it going to mean for the broader real estate market and for the broader economy? And at the same time, as many of my colleagues and the major media outlets are portraying, is it really going to bring an influx of buyers who are really waiting for this news to happen? And is it really going to matter that much? All those things, we're going to dive right into it. So this is going to be a value-packed video. If you are following the real estate market in Waterloo or anywhere else, stay tuned. You don't want to miss out. We're going to get right into it. Hello and welcome. If this is your first time to the channel, be sure to subscribe and tap on the bell for notifications so you're the first to learn about the current market in and around Kitchener Waterloo. My name is Divergence. I'm a local real estate agent serving Kitchener, Waterloo and surrounding areas. I've helped many families with their move in and around Kitchener Waterloo, and I absolutely love it. So whether you're thinking of moving in 9 days or 9 months, be sure to reach out. You can give me a call, shoot me a text, send me an email, or you can even schedule a Zoom call. All the info you will find right below in the description. I'll be more than happy to help you and your family make a smooth move in and around Kitchener Waterloo. So now with that rate cut, the very first question that comes on the top of mind for everybody is it time to party yet? Is it this rate cuts, are they going to continue for the rest of this year, let's say in July when the next rate announcement is scheduled by them? Well, and this was one of the questions that was asked by a lot of reporters across the major media outlets in that conference when they did announce that rate cut just like this past week. So, and the response from the governor was pretty much, same across the board, where it will have to be backed up by data before they can make a decision or say anything about whether or not they're going to proceed with another rate cut. And rightly so. Even if you look at how we arrived at this June rate decision, well, that's partly because of that it was supported and backed up by the data. The CPI data for the month of April and for the month of March were both positive and, looking good. We could see the signs of broader economic cooling down, like the labor market, consumer demand, all those things were really showing signs. And again, when I say signs, I'm talking about the data that came out during those months. They show that there is a clear indication of the inflation cooling down and heading towards that 2% target that the Bank of Canada has. So that kind of did encourage them to go ahead with that rate cut for the month of June. And it's too early for them or for anyone for that matter to really predict and say, okay, there's likely going to be another rate cut in the month of July, because we are yet to see the May CPI data. That's going to come out in the month of June, like in the coming weeks, towards the third week of June. And I believe that the Bank of Canada will take a closer look at the CPI data as it comes out towards the end of June for the month of May, because that will be a determining factor to decide, which way the inflation is heading. Is it still heading towards that 2% target, or is that gotten stable or gone up, which is the worst case scenario? Well, so that's the data they're going to be looking at more closely. And another follow-up question that comes up and that was asked during that press conference is also the fact that, with that rate cut now priced in and, announced, do you think it's gonna bring a lot of buyers and a lot of demand in the real estate market? Well, that was the question that was asked. And honestly speaking, you have to understand the effect of this one rate cut of quarter basis point on the broader economy and the real estate market. Well, if you are holding a variable rate mortgage, and let's say if you're holding a mortgage of $500,000, well, your affordability is getting better in the sense that you're paying about $75 less in your monthly mortgage that you're holding for the amount of $500,000. So, you might want to ask yourself, is it really that big of a difference? And if I'm a potential buyer in the real estate market, well, is it really going to deviate my decision about buying or not buying a home in this real estate market? I would tend to say no. It's still too early. Like if you are a buyer and if you are solely relying on the rates as a determining factor for you whether or not to go ahead, well, this is too early for you to jump in the market, because one rate cut is, it's too early to kind of, decide the trajectory of the market, like I said. And like the governor himself said, like it's too early to say how we are going to go and move forward with this rate cut or the monetary policy for the rest of this year. So just keep that in mind. The affordability has not gotten any much better. Like, yeah, people in variable rate mortgages will have a little bit of sigh of relief to see that the rate cuts are finally happening. But at the same time, people who are getting qualified right now for mortgages are anyways getting qualified at fixed interest rates, because it's much harder for them to qualify at the variable rate mortgages, especially with the stress test in place. So that's just for you to keep in mind. And if you, in case you're wondering what actually drives the fixed interest rates, are they not coming down? Well, I can tell you the fixed rates are anyways not driven by the central bank's rate announcement. It's only the variable rate that will change. So the fixed rates are primarily driven by the bond market for US and Canadian bond market. And that is primarily driven by a lot of global economic factors. So, do not anticipate that, just because the variable rates came down, now the fixed rates are also going to come down. I mean, so far, since that rate announcement, we obviously haven't seen the bond rates move too much, or as a result of that, the bank's fixed rate has not moved that much. So just keep that in mind. In terms of affordability also, I think it's not going to get any better for you. Another important question that was asked during this press conference was about the policy divergence between the US Federal Reserve and the Canadian Central Bank. So as you know, the US Federal Reserve has not yet announced any rate cuts, and earlier people were anticipating that, I think the central bank will wait for the US Federal Reserve to first announce its rate cut and then they will follow the suit, which obviously we have not seen, because the US CPI data and the labor market data came out stronger than they had anticipated for the month of March. And of course, they did see some signs of improving in the month of April. So, the data that came out in just last month. So, but we are yet to see any policy rate cuts by the Federal Reserve. And, what's happening right now is we are basically, with that rate announcement that happened last week, we are basically diverging from the Federal Reserve in how we approach our monetary policy as a central bank in Canada. So you might be asking yourself, well, why does it matter and what does it mean for us? Well, why does it matter is because, if we are to deviate too far away from what the Federal Reserve's monetary policy is, then, that could affect the Canadian dollar to come down in value. And as a result of that, as you know, we are an importing company. We are the net importer from US, and that in turn, we will have to pay more to the goods and services we import from US, and in turn, it will cost us far more than it is right now. Well, already it is higher enough, but it'll basically fuel the inflation even more. So it'll become a vicious cycle. So the central bank is very well aware of that. And, obviously they are closely looking at how far they can diverge. They did mention again and again, this was one of the questions that was asked by multiple reporters to the central bank governor multiple times, but he did mention, yes, there is a range, but, obviously they're not going to tell you that range. Otherwise, you could make out which way the rates are heading and people will react accordingly in anticipation of that. So they did not want that to happen. So as a result of that, they're very well aware of that problem, or, more so a situation that they have to be aware of, and not to diverge too far away, but there's a range up to how far they can go. And he was confident in stating that, we are well far away from that range, reaching that range. So, we will still see, even if the Federal Reserve was not to yet announce another rate cut or their first rate cut come in coming months. But if we do see the CPI data and some of the other broader economic conditions softening further and the inflation heading towards that 2% target, I think the Bank of Canada did give a good sign that they'll be rather backed by the CPI data and some of the other data points in their decision making about the interest rates, rather than just solely relying on where the Federal Reserve is heading. But having said that, they will not diverge too far away when it comes to, the rate cuts. And let's talk about what to expect for the rest of this year when it comes to real estate activity. I mean, the data for the real estate market just came out in time, right along the side where Bank of Canada did this announcement just the past week. So for the month of May in Waterloo region, the inventory was at like about 8-year high. And what you will see, and if you're driving around the streets across KWC, what you will also see, like, you see the boards for sale sign up all over the town. And yes, we are at about 8-year high inventory. We are about, in other words, 2.5 months of inventory right now in the Waterloo region. So there's definitely a lot of options for buyers. But I'll tell you what's happening. So the activity did slow down. The transaction did not happen, and transactions are not happening as much as they used to be earlier this year when I recorded that spring market video. Multiple offers were happening. Sellers and buyers were reaching an agreement. Buyers had a motivation in place. I don't know what that factor was. Was it about this rate cut that they didn't want to be part of? But nonetheless, what I'm trying to say is things have definitely slowed down for the rest of the spring and early summer, as I'm seeing every day working with buyers and sellers in this market. What I'm starting to see is, buyers with having too many options, they're obviously having their expectation high on the homes and, low on the price. And same time as a seller, obviously as a real estate agent, I would not advise my client in this market to buy first and then sell, rather sell first and then buy, because this is kind of a balanced market, you can say. So what's happening as a result of that is buyers are kind of holding on to their price and they don't want to budge too much. Like they want all in. They think that they can win the world, but at the same time, sellers are not budging as well. So what we are seeing is buyers and sellers are not reaching that agreement. Sellers have their expectation that, we saw early spring when the market was hot. You might say it was the peak of the market for 2024. We'll see how the year unfolds for the rest of this year. But what we saw in, March and, early April, those things are not happening anymore. So as a result of that, buyers and sellers are holding on to their own price and expectation. And as a result of that, the deals are happening, but they are happening few and far apart. They are not happening as often because sellers, majority of the time right now, the sellers that are in the market are not the sellers who have intense motivation to sell, or they have already done another deal of purchase ahead and they have to close on it. So sellers are basically just testing the market. And, if they get the desired price, then they will go out of it. But if they don't, then they're okay to cancel or terminate the listing. So that's what we are seeing right now, at least in the early summer. We'll see how things unfold, especially if the Bank of Canada continues to, proceed with those further rate cuts in the coming months. I feel like that will definitely bring more buyer sentiments and confidence back into the market. And finally, if I were to share my 2 cents about, what to expect for the rest of this year, I'll say, unless the Bank of Canada goes ahead and does further rate cuts, I think it's going to be a sluggish summer and fall. We probably saw the best of this market, like the peak of this market, earlier in the early spring, and we'll see how the year unfolds. But what I can tell you is the affordability issue still persists. We are yet to see a lot more rate cuts before we can see an influx of buyers coming back in the market. What it will change though with this first rate cut is actually the buyer sentiments and the overall sentiments of the people across the broader economy, like consumer sentiments, what we talk about. That's definitely going to change in a positive way. Consumers are feeling definitely more positive about the market and which way we are heading. And of course, the Bank of Canada is giving an indication that we are heading towards that 2% target. So, that basically what will help a real estate market and the broader economy to bring back that buyer confidence into the market and increase some of the activities. But, are we going to see anything like as crazy as 2022? I don't think so. I do feel like the Bank of Canada is going to be very slow and gradual in how they approach the monetary policy easing and the rate cuts. So I'm not expecting at least back-to-back rate cuts happening this year. If it's going to be somewhere between now and let's say end of next year, we'll see about, interest rate hovering somewhere around that 4%. So about 1.5% decrease from where we are right now. So, but again, that's a long way to go. There's a lot of data has to, back up that decision by the Bank of Canada to arrive at that rate. So let's see how the year unfolds. Maybe I'll do one more video towards the end of the summer or early fall. But let me know in the comments below what your thoughts are. I mean, it started pouring here, but it was great and sunny when I started this video. But let me know what your thoughts are in the comments below. I'd love to know your thoughts about what are you expecting for the Bank of Canada and the broader economy to head. Which way are you expecting that to head for the rest of this year? But nonetheless, I hope you did get some value. I'll be sure to include the link about that Waterloo real estate market update in the description below. So be sure to check it out. But nonetheless, if you did get some value, be sure to give it a thumbs up, subscribe to this channel, and tap on that bell for notification so you are the first to learn about the current market in and around Kitchener Waterloo. Once again, whether you're thinking of moving in 9 days or 9 months, be sure to reach out. All the info you will find right below in the description. I'm more than happy to help you and your family make a smooth move in and around Kitchener Waterloo. Until next time, well, I do hope to see you around town.